Yes, welcome to question 2 of the financial accounting paper of CPA, which was done on April 2025. Now, in this question 2, we are being asked, highlight 2 features that distinguish a public sector entity from a private sector entity. So we are looking at the difference between a public sector entity and a private sector entity. Here, there are 2 key features that distinguish these 2 sectors. First, it's about ownership and control. Now, when you talk about ownership and control, the public sector entity basically is owned and controlled by a government or by a state. Their primary purpose is to provide services to the public and promote the welfare of the well-being of the communities within that state. So they are funded through taxation and government budgets to run or to ensure that they are offering services to its citizens. On the other side, when you talk about the ownership and control of a private sector, the private sector entities are owned and controlled by private individuals or organizations. So their primary goal is to generate profit for their owners or shareholders. So they operate in a competitive market and they are funded through private investment or maybe sales of their products and services, or maybe they acquire loans in terms of borrowed money and all that. Number 2, what differentiates the 2 are the objectives and the purposes. So as I've first clearly said, on the public sector, the objective or the purpose of the public sector, which is run and controlled by the government or the state, their main objective is to give services to its public or to its citizens, who are the taxpayers. So they pay tax for them to receive services. The services like education, health, security, agriculture. You can look at the different departments that we have within the government. So infrastructure, building of roads and all those. So they focus on social welfare and community development rather than profit maximization. What else with the private sector, their main objective primarily is to maximize on the profit. So they are interested in terms of how much profit they're making and the creation of wealth to shareholders and all that. So when a private individual invests, he looks forward to get profit from the investment. When investors come in and put money, they're looking forward to get returns in terms of either dividends through the when an organization does well in its financial reporting. So they focus on efficiency, innovation, market competitive and all that. That's why you can find that private organizations are very efficient because they know they have to be efficient for them to maximize on their profits. Also, thirdly, what differentiates them, it can be the issue of funding. Public sectors are funded by citizens through payment of tax. Of course, we have other methods of government revenue, which is like government can receive donations and grants, it can borrow, and even if it borrows, it's still the citizens who are going to pay tax to repay the loans. What else when it comes to funding of private sectors? The funding of private sectors is funded through private investment, sales revenue, or loans. So profit generation is a very essential for sustainability of a private organization. So private sectors get money from their own as the owners of the business, which they put in as investment. Or they can sell their goods or services. Sometimes they can sell off the assets to raise money. to continue, or they can go to financial institution and borrow loans for them to get money to run the operations. Also, the other difference is on regulation and accountability. In the public sector entity, the public organizations are subject to government regulation and public accountability. They must adhere to the policies to ensure that transparency and public interest is served. And so we have different organizations that also are within the constitution that facilitates regulation and accountability of public institutions. Like we have the Auditor General who audits the government institution yearly. We have the control of budget who ensures that the government organizations are using or spending public money in line with the approved budget. We have the PSC, the Public Accounts Committee in Parliament, who are always there to check on the auditor reports for them to summon and ensure that public organizations are, doing things efficiently and transparently. We have the ESCC, who investigate and prosecute corruption issues. So, public sectors are regulated and accounted for by public organization also, and bodies that are created to oversee them and regulate them. Whereas when it comes to private sector, private sectors operate under commercial laws and regulations, which means that accountability is primarily to shareholders and investors who have invested and put in their money. So there is very less public oversight in private sectors compared to public entities on that matter. Now, if we move to the next question, explain 4 objectives of financial accounting. The objectives of financial accounting are very essential for providing relevant financial information to various stakeholders within the industry. Here we have the 4. First, provision of financial information. So financial accounting helps to ensure that it provides accurate and timely financial information about an entity's performance and financial position. So this information is presented in presented in the form of financial statements, which includes the income statement. We have the balance sheet. We have the cash flow statements, which helps stakeholders understand the entity's financial health. So both public organization and even private organization, they have to prepare financial statements at every end of the year. For the public is after every end of the financial year. For the public organization is a year that runs from 1st July to 30th June. That is the fiscal year or the financial year for the government institution, whereas for the private can be from January to December. So these documents or statements must be prepared to be able to show or give information about the financial status of an institution. Number 2, facilitation of decision making. Financial accounting provides critical data that aids management, investors, creditors, and other stakeholders in making informed decisions. This is done by analyzing financial statements. Stakeholders can assess profit, they can assess the liquidity and solvency, which are crucial for investment, lending, and operational decisions. So for investors to decide whether they are going to put in more money or not, they will want to know the financial status of the institution, the financial stability. For people or shareholders to decide whether to buy shares of that company and all that, they will want to know the financial performance of that organization. So that information or those informations are going only to be provided through the documents that are going to be prepared in line with what we're talking about, financial accounting. Of course, another objective is compliance and accountability. So financial accounting ensures that organizations comply with relevant laws, regulations, and accounting standards. It promotes accountability by requiring entities to maintain accurate records and report their financial activities transparently, which helps build trust with stakeholders. So compliance of the legal standards and accounting standards, which facilitates accountability, must be achieved through the reporting of financial accounting. Also, lastly, it's all about performance evaluation. So financial accounting allows for the evaluation of entities' financial performance over time to time, so that you can be able to tell whether the organization is financially stable or not. So this is done by comparing financial results across different periods or against industries through maybe benchmarking. Stakeholders can assess also how well the organization is achieving its objectives and identify areas for improvement and stuff like that. So if you want to tell whether the organization is growing, is by using financial accounting. Look at the documents, look at the net profits that are being generated and all that, the financial stability through the analyzing the balance sheet and all that. You can be able to tell whether the organization is growing or is not growing based on the financial performance. Now we move to question 3, where we have been given information and we are required to calculate some information. Now, in question 3, we have been told the following information relates to the summary, receipts, and payment for Beipoa Football Club for the year ended that 1st December 2024. In the receipt, the balance at January 1st January 2024, we had 786,000. That was the balance brought forward. No, that was the not brought forward. Yeah, that was the balance brought forward, because it's as at 1st January. So right, I'm right, because it means that the balance that was brought from the previous year, which was as that 1st December 2023, that was 786,000. And then there was subscription received from 2023, 2024, and 2025. And also there was some restaurant sales, which was part of the income, 91,920, 91,920,000, because it's in terms of thousands. There were donations received, that was 1.2 million, and the total received amount was 119,331,000. Payments, we had payment for restaurant supplies, we had the groundsman wages, we have the restaurant staff wages, restaurant expenses, repair to stand and pavilion, we have the gym rent and upkeep, we have the management expenses, transport cost, and of course balance as at that 1st December 2024. If you check minus the income, which is 119,331,000, minus the expenses, which were part of the payments, 110,016,000, you will get the balance as at that 1st December was 9,315,000. Additional information. The following balances were available as at that 1st December. We have for as at 1st December 2023 and as at that 1st December 2024. Inventory in the restaurant as that 1st December was 6,744,000, 6,744,000, Then as at 2024 December, which becomes the closing balance for that year, was 8,337,000. Owing for restaurant supplies, 4,941. Then we have 2024 we have 6,510,000. Accrued restaurant expenses, we have 338,000 in 2023. Then in 2024 we had 504. Transport cost accrued, in 2023 we had none. In 2024 we had 398. The second additional information is that the gym equipment as at that 1st December was valued at 3,750,000 and is to be depreciated at the rate of 20% per annum. Subscription owing by members amounted to 2,100,000 on that 1st December 2023 and 2,625,000 on December 2024. As at that 1st December 2023, land was valued at 60 million and pavilion at 30 million. The pavilion was depreciated at the rate of 10% per annum at cost. Required restaurant statement of profit, loss for the year ended 31st December 2024. Now, you've had the question. When we talk about preparation of the restaurant statement of profit and loss account, basically, for non-profit organizations, because we are told this is the sum received and payment for the Bayport Football Club, or for organizations, they prepare statement of profit and loss account, which is similar to the income statement. Now, for this matter, the question as specifically asked about the preparation of restaurant, not any other, but only specifically on the restaurant. That is why even it has 6 marks with all that information. So we are only going to be interested on the information that is only pertaining the restaurant. So I will want us to go one by one so that we can be able to see how we came up with the below information. So to prepare this restaurant profit and loss account, now now we will want to we start with the restaurant sales. Sorry, let me put here. If we go back to our information, we are not interested with this other information. We are only interested in the restaurant. So we are talking about the restaurant sales, which was at 91,980. So the restaurant sales were 91,980. This is in terms of thousands. Remember that, so that it's 91,908,20. Sorry, it's supposed to be 91,920, not 80. Right. Then now, let's check on the cost of sales. So in the cost of sale, we we'll start from the opening stock. So in our opening stock, remember we have been given in additional information number 1, the following balances were available as at 31st December 2023 and 2024. So the opening stock as at that 1st December, inventory at the restaurant was 6,744,000. So here we have 6,744,000. Then we add purchases. Now take note, we haven't been given purchases at the information, but how do we get purchases? Because we haven't been given purchases, this is how we are going to calculate purchases. We have said that purchases equals the closing creditors plus payment minus the opening creditors. So our closing creditors, we have been told that owing for restaurant supplies. So these are suppliers, these are the creditors whom we haven't paid. So the closing creditors was 65, this figure here, 65.10. Then we'll come and we have said that you add payments we have payments here from the restaurant, payment for the for restaurant supplies. So we have payments here, this figure 57,920. So we add that payment 57,920, then minus the opening creditors. The opening creditors from the additional information we have 49.41. So here that is what we are going to use for us to get the purchases. So if you had that closing creditors plus payments, you add that, then you minus the opening creditors, which is 4,941,000, then you are going to get 59,499. That becomes our purchases. So we'll have 59,499. So I hope you have seen how we have calculated the purchases, because we are not given with that, so we have to find it. Then with less closing stock. So we'll have our closing stock, inventory restaurant in 2024. Here we have the closing stock, which is 8,337. So we less, once we are lessing, we put them into brackets, so we less on that. So if you less that, you are going to get, if you had that, that will be 6,744 plus 59,499 equals to 66,243 minus 8,377. You will get 57,866. So you will get 57. Are we supposed to minus? Let me check if my addition is correct from what I have here. Oh, sorry. The figures balance. I was getting what the figure supposed to be 8,337. I have written it wrongly here. It's supposed to be. That is why I was worried. Why is it? So here it's supposed to be 837. and not 8377, but rather 8377. That is the figure. You need to be so careful so that you avoid such kind of errors. So if you do that, you are going to get 57,906. 57,906. Of course, then now we less that from our restaurant sales. Now our restaurant sales were 91,920 minus 57,906. That will be 34,041. Right, let me confirm. Yeah. So then now this is the gross profit. This is the gross profit. And we do not have any other additional income. So what we'll do, we will less expenses. We will less the expenses. And on this particular expenses, we have only two expenses that are in line with the restaurant. All the other, in terms of payments and what we have been given here, we only, as I said from the first, we are only focusing on the expenses. So the groundsman wages, they're not related with the restaurants. The repairs to stands and pavilion, the gym rent, all those are not related with the expenses. The expenses, the restaurant expenses that we have here are the restaurant wage, staff wages, and the restaurant expenses. Those two. And even in the addition, if you go through, we do not have any other. We only have accrued restaurant expense. I will tell you how we are going to deal with that. So in the restaurant expenses, we have said we have restaurant staff wages. So in our calculation, we have put restaurant staff wages. So that we are going to put them as 12,936. $936. I hope that is the figure. $12,936,000. Then we have restaurant expenses. Now here, we have been given the restaurant expenses as 351. That is the 351,000. But remember, there's additional information where we have been told that there's accrued restaurant expenses. We have accrued restaurant expenses at opening, which in 2023, as at December, we had accrued, which were 338, and then at December 2024, the expenses were 504. So what we are going to do, what we are going to do, the expenses that were accrued, we are going to add the expenses, the balance at 351. So to calculate, to get the right amount for that, just let's do it somewhere here down. We are going to have 351, that is 1,000 in terms of thousands, plus we will add the expenses for 5 or 4,000 minus the expenses for 2023 for us to get the right figure, that is 338,000 in that, so that we are able to get the right figure for the restaurant expenses. So if you get 351,000 plus 5 or 4,000, that will be 855,000 minus 338,000. You're going to get 517,000 as the expenses. So here we are going to use the restaurant expenses here at because we are putting this in terms of thousand, we are going to have it at 517. So basically these are the total expenses. So if you had those, that will be 12,936 plus 517, that will be 13,453. So if you less that from 34,014 minus 13,453, you will get 20,561. Let me remove this. So you'll get it 20,561. So that becomes our net profit. So that is how you prepare the restaurant profit. The restaurant profit or loss, or the restaurant statement of profit and loss, or in other organization it's like an income statement. Now, number 2, the second part in this question, we are being asked, prepare the restaurant income and expenditure account for the year ended that 1st December 2026. Now, for us to prepare the income and expenditure account, first we need to prepare the subscription account for us to be able to determine how much income statement was used. So the reason for us to prepare a subscription account is to get the amount of money that was received that particular year by providing the amount that was received that year. That we are going to do using the T account. So here in the subscription account, we are going to debit the accrued amount in terms of subscription. Look at the subscription. We have subscriptions that were received in 2023, 2024, and 2025. So the accrued amount, which was like the accrued amount to 2023 was 2,100,000. So that is the amount we have here as 2,100,000. So we go step by step. So we prepare that T account. So we'll start with accrued at, so we have 100. So let's put this as in thousands. Let me just put them in thousands like that. Let me be a bit organized. So we have 2,100,000 and like. Then we credit accrued at end. So accrued at end, we look at the subscription paid at accrued at end, which was at 2024, because we have been told, let's look at the question. We have been told to prepare this at a year ended 31st December 2024. So we go back, look at the additional information. Number 3, we have been told that subscription owing by members amounted to 2,100,000 on that 1st December. So the 2,100,000, that is what we have indicated here as accrued at, because it was accrued at the beginning of 2024. So it's accrued at owing members amounted to 2,000 at that 1st December. So it was accrued as at that first, as at 1st January 2024. So we have that amount that was accrued, that was brought forward. Then the amount that was accrued at the end of the year 2024, which was carried forward to the year 2025, was 2,625,000. So the 2,625,000, that is what we have here, 625, 2,625,000. That is where we are going to put as accrued. Then we are going to have the prepaid at in terms of prepaid at, which was prepaid from the previous year, because we are talking about 2024, we are doing it the account for restaurant for 2024. So the prepaid was the subscription amount that was paid in the year 2023. It's clear we have been told that subscription owing members amounted to 2,100. And even if you look at the additional information, subscription received in 2023 was 2,100,000. So 2,100,000 was the amount that was prepaid. So what we do, we add prepaid at 2,100,000. And then of course in 2024, sorry, before we go to the 2024, so down here we have prepaid at end. So prepaid at end, look at here at the end of 2020, is it 2004? At the end of 2024, we have a prepaid amount of 1,800,000. So here at end, we are going to put the prepaid amount. Let me just create space. 1,800,000, and then here we are going to have a book value, which was now for the book value for 2024 is 21,525. 21,525. So this is the amount. We put it as cash book. This is the amount that is there in our cash book in the year 2024. So what we are looking for is this income statement, which is the balancing figure now here. So if we are able, okay, let me create some more space here. So we have this as 26, 25. Just a moment. So here we want to get the income statement. This is the one that we are going to use to prepare our income and expenditure account. So we'll have to 121,525 plus 26. That will be 26,250. 26,250. So our income expenditure, that is what we are looking for, minus 2,100 minus 1,800. We are going to have 22,350. So this is the figure that we are looking for, 22,350. So that is the figure that we have there. So we will come to our income expenditure. So we will start with the expenditure. So let me take through. So in the expenditure, we have from the information that we are given here, in terms of payment, we will start with the groundsman wages, which is 29,908. So we have expenditure here, and then we have income, so it's in terms of zeros. So in terms of expenditure, we have that figure 29. That was groundsman wages. So on the groundsman wages, we have 29,908. Then I want to go one by one so that I can be able to explain how we get that figure there, the one that I put in green, for this income and expenditure to balance. Then of course we go to the expenditure we have is we have repairs and rent. So we go up to confirm on that. In those expenditure, we have repairs to stand and pavilion at 1,110,000, and we have the gym rent, which is at 2,744,000. If let's see, do we have any in terms of the information? So we have the adding in terms of additional information, we have information that states that the gym equipment as at that 1st December 2023 was valued at this amount 3,750 and is to be depreciated at the rate of 20% per annum. Then subscription under this as at that 1st December, land was valued at 60 million and pavilion at 30 million. The pavilion was depreciated at the rate of 10%. But now here in our income, we'll take on the information that we have there. The repairs were 1,110,000. Then the rent, of course, 2 million. Just let me record them so that we have. So here we have repairs and rent. So this year we have 1110. And then rent we have let's confirm here. We have 2744. That is the right figure. And then of course another expense that we have here, we have the groundsman wages, we have the repairs to standard pavilion, we have the gym rent, we have management expense, and then we have transport and cost. Management expense is 1404. So we come and indicate that management expense there. Management expense, let me confirm that. That is 1404. Is it 1404? 1407, sorry. Then we have transport. Now with the transport, remember in the additional information we have been given transport cost accrued, which is 398 in the year 2024, and here in our transport cost we have that 630. So what we are going to do, because this is it's at the end year of 2024, we have transport we have that is 3630 plus 398. On the one that, okay, let me just create some more space. That is 3630 plus 398. So you have if you add that, you are going to get 4028. Then our next expense will be depreciation on gym. We will check from the data. From additional information, we are being told that the gym equipment at that 1st December was valued at this, and it was to be depreciated at 20% per annum. So if you take 20% of that 750, you are going to get, yeah, that is right, you will get 750. So there's a depreciation of gym equipment that was at 750 there. And then we have the pavilion, and we have been told from the additional information here, as at that 1st December, land was valued at 60 million and pavilion at 30 million. The depreciation was at the rate of 10% for the pavilion. So 10% of 3 million, of course, of 30 million, sorry, will be 3 million. So depreciation of a pavilion will be 10%, which is 3 million. That is 10% of 30 million. And this was 20. Is it 20% of 3750? That is the figure that we had there. So those are the expenses. Let's come to the income. The income was gotten from the of course, we have been told that the income came from restaurants, subscription, and donations that were received. So the income came from the three: restaurant sales, subscriptions. Now remember, the subscription is what we have calculated earlier, and donations, because we calculated the subscription so that we can use it. So the figure that we calculated in the description, the 22,350, that is what we are going to take, 22,350. And then the restaurant sales, of course, let me see on that, we have 20,561. So let me show you where the 20,561 is. Okay. Already we have restaurant sales at 91 and all that. Then we minus the cost of sale, and then we minus the expenses. In that, our calculations, remember, we got 20,561. That is the figure, 20,561. So that is another income. That is the net income or net profit from the restaurant sales, which was 20,561. And in terms of donations, from our question, donations were received at 1,200,000. So we do not have any additional information that affects that. So we have 1,000, sorry. In terms of donations, we have 1,200. So the balancing figure look at this. Now if we had all this expenditure, that is 29,908 plus 1110 plus 2744 plus 1407 plus 4028 plus 750 plus 3000, you're going to get 42,947. Then if you had 2561 plus 22,350 plus 1,200, you will get 44,111. So if you take 44,111 minus 42,947, you are going to get the figure of 1,164, which we are going to refer as a surplus. Now, which balances this figure to 44,111. So that is how we got, because I did not want to take you through what that means, but we move from step to step so that you can be able also to look at how did we find this surplus figure on the expenditure. So that is how you prepare your income and expenditure account. So that is it for question 2. All the best as we move on to question 3. Thank you.
So if you like this video, you can always enroll with us. You'll be able to access more of these revision sessions, and also you'll be able to find well done lectures or pre-recorded videos for all the KASNEB courses as well as CHRP. And in case of anything, you can always reach us out. We have our contact details on the screen. Feel free to call, feel free to WhatsApp anytime. So thank you, and let's meet in our next session.